we still think it goes lower. The other thing I was just going to point out,
which sets us up for phase 3 of the banana zone. So phase 2 correction would be this. If it continues to trend sideways or a little bit stronger, that would be a corrective phase when everyone starts thinking it's all over, we'll give up now. And then we should get phase 3, which is the final leg in the dollar, potentially a leg lower in rates, and the more speculative frenzy that comes at the last part of this.
Hi everyone, welcome to Smart Invest. With Ethereum trading close to $2,500 and Bitcoin trading between $13,000 and $15,000 this week, the cryptocurrency market remained largely stable, reflecting cautious investor sentiment amid growing macroeconomic and geopolitical uncertainty. The absence of significant directional movement, notwithstanding a few small oscillations, emphasizes how susceptible the market is to outside influences such as changes in interest rates and international conflicts. As anticipated, the U.S. Federal Reserve kept interest rates unchanged at 4.25% to 4.5% during its June meeting. However, Chair Raoul Pal adopted a cautious stance, pointing out that inflation is still higher than target and stressing that future rate reductions would be contingent on additional advancements. Significantly, a hawkish shift that puts pressure on cryptocurrency markets, which normally benefit from easier monetary policy, has seen more Fed officials now predict no rate cuts in 2025. Bitcoin briefly fell below $13,000 as geopolitical tensions flared up again, especially because of the growing conflict between Iran and Israel. As riskier assets like cryptocurrency failed to gain traction, investors sought refuge in gold and U.S. Treasuries, demonstrating how quickly investor sentiment can turn sour in response to global instability. Raoul Pal, CEO of Real Vision and a macro expert, is upbeat despite these challenges, speculating that a new surge in Bitcoin and the cryptocurrency market as a whole may soon replace the current drab corrective stage. Pal recently spoke extensively about this outlook with Julien, head of macro research at GMI. Remember to like, subscribe, and enable notifications for more content as we share highlights from their conversation.
That's right. And so what's interesting about that, I was looking at it this morning, is that we have the same chart versus Bitcoin, right? 3 month on 3 month. So the 3-month rate of change, which is not in this pack. But that top point there, or the high, is actually August, which then stacks up with the V, which then stacks up. Sorry, I had a lot of charts in this pack.
Really, that's surprising. You generally are quite light on charts.
I know. Which I think then stacks up with this, right? Because this is not, Global M2 here is not updated for the dollar's recent move higher. And I actually think the dollar may head a little higher here. I'll show you that chart in a second. But if that's right, then this top bit in Global M2 will come lower and should set us up for that corrective phase, which that other chart also matches. And as I pointed out in MIT,
but financial conditions leads M2, right?
Financial conditions leads M2, but here you're talking about the rate of change versus, remember, it was that whole thing of the everything code dominoes. There's a bit of a difference in the lead versus rate of change versus outright. And so basically what here they would line up to say around August, we should see something, but we have to see, right? It really depends on what the dollar is doing. Because if I just shift.
But we're expecting financial conditions to continue to ease, right? Because we think there's another leg lower in the dollar. We think rates either stay flat or move lower.
Yeah. So that's right. So, but if we just skip back up here, I'm going to come back to the dollar. Where are we here? Right. So we're coming lower. Obviously yesterday we moved a little bit higher, but I think that ultimately the trend's lower. But I also think over the next, if you look at, guys, I'm just going to change screens here. That's all right. To Bloomberg. If we look at the dollar here, right? I mean, we've counted down to wave 5 and we had a 913.9. And this is basically where you and I were like, this is going to go higher. The chart's not on the screen, is it? No, it's us.
Yeah.
Okay. Is it? Oh, there it goes. Now it's back.
Yeah.
Then it came lower and then we unlocked a wave 2, or now we've unlocked a wave 3 of potentially 5 higher. I don't know if that plays out, but you can see that the counts are all stacking up here pretty heavily. So in the event that the dollar does move higher to, let's call it 104, which DMARC wave count suggests, which seems a bit high to me, but nevertheless, this would unlock that corrective period.
Which is looking like August into September, maybe. We don't know the length of it yet.
Yeah. So that's why I was saying at MIT, the next move in the dollar is going to tell us everything that we need to know about, the ISM, when that peaks out, everything else. But I think whether this goes higher or not over the medium term, not even medium term, I should say over the short term, we still think it goes lower. The other thing I was just going to point out,
which sets us up for phase 3 of the banana zone. So phase 2 correction would be this. If it continues to trend sideways or a little bit stronger, that would be a corrective phase when everyone starts thinking it's all over, we'll give up now. And then we should get phase 3, which is the final leg in the dollar, potentially a leg lower in rates and the more speculative frenzy that comes at the last part of this.
With assets like the dollar and U.S. Treasuries exhibiting short-term movements but no discernible directional momentum, markets across major asset classes have entered a phase of consolidation, suggesting that the market may be digesting previous trends rather than getting ready for a new macro shift. Recent gains in both cryptocurrencies and stocks have now leveled off, and while many indices and leading tokens appear to be overbought, there isn't any concrete evidence of underlying structural weakness. As investors reassess their positions, we are witnessing a traditional corrective pause following a robust rally, which results in reduced volatility and slower momentum. This consolidation is taking place in the cryptocurrency space amidst rising valuations and shifting sentiment. Even though trading volume has decreased, many top assets still have technically sound setups, and there is still an active capital rotation going on behind the scenes. This period of introspection and rebalancing is a healthy break in the trend, not a sign of weakness. Raoul Pal and Julien explore the technical and macro context of these movements in this episode, providing insight into the new signals that may characterize the market cycle's next leg.
Yeah, and just because I have this open, Bloomberg, and I'll let you pull up your charts, is I was looking at Solana vol levels today, just out of, but I also don't know why they cut. Did you notice that they cut our time series?
No.
Now it only goes back. I could have sworn it went back.
Do the XSO current, the other version of it.
I tried. It's the same.
Really?
Yeah. Anyway, but here's the point. Solana vol levels have collapsed to below 50. And so the last time that this happened, the last 2 times that this happened was September 27th of 23. And then Solana went on to basically 10x. And then June 24th of last year. And then we went up, around 100% or so. So that's kind of interesting because I hadn't realized that the vol stuff has collapsed so much.
No, me neither.
So I'll do the same. We can do the same for Bitcoin and ETH and look at a few other things for GMI. The other thing I think you were going to point this out as well is I do see a 13 daily on Bitcoin. The only problem I have with this is if we look here, kind of December time, liquidity was draining and city economic surprises had peaked. So, the 2 drivers, both if the market's priced off of consensus expectations, it now needs to reprice stronger growth coming in versus the opposite. And liquidity is actually rising if we talk about M2 versus the opposite, which was taking place here. What's your thought on this? I mean, because it has been, the market's been trading a bit.
Well, go to the M2 chart, and there's some wiggles in that chart that give us some clarity.
Oops, that's the wrong thing. Let's go here, all the way down.
You see, there's that nice wiggle that it's not uncommon to get a slight correction. Whether this correction runs further, I think it's just forming a flag.
Well, and also if we zoom in on this, so we come to, by the way, this has been working, as I said to you before the call, this has been working really well. But if we kind of zoom in on the same chart, I don't see why this would work that well. Right.
No, it shouldn't be working wiggle for wiggle, but it appears to be right now, which is weird as shit, and I don't trust it.
Yeah, neither do I. But point is that I don't think that this is unusual. And that 13 on the daily doesn't really line up with the other stuff that we're looking at. You know, like, and here's the other point is like, yes, Bitcoin's oversold. Yes, overbought. Yes, equities are also overbought. But again, the last 2 times we triggered overbought readings, this was the boring zone. Remember, the long, drawn-out boring zone. This was obviously Jan. But in both of these situations, you know, liquidity was draining. And here's an RSI overbought reading, and the market just went higher. Like, it feels much more like this than either of these two events. You know what I mean?
Yeah. It's just, I think everybody finds it frustrating because they want to just go up every day or every week, and it just doesn't work that way. It goes in spurts, and if you miss those opportunities, which is why I don't like ever being out of the market, because you miss it.
Yeah. Well, the other thing, with that, which I found really funny is, I mean, Bitcoin's up like 50% off the lows or whatever it is, 40 something. And then the market drops 2%. And people are like, oh, you know, is it over? It's like, guys, calm down, you know? And then let me just show you let me change screens, guys, to a couple of the charts here. And I'll let you share yours, which I guess you and I probably have a few of the same charts, but we might as well show mine first because they're usually better.
Yes, that's a call.
But so this is the Bitcoin 1 hour chart, and looks a bit, you know, I mean, messy as
it's either a flag or it's got another leg lower. It's either an ABC correction or it's a flag.
Yeah, I think it's a flag, but this is kind of the range that I would watch. This is what you and I were talking about earlier when you were on the plane to Little. Looks like an inverse head and shoulders, right?
Yeah.
And then when you zoom out,
same as the Tesla one. I'll show you that in a bit, but it's interesting.
And then if you zoom out, let me remove this. Like, this is still the big setup, isn't it?
Oh, it's gorgeous.
Yeah. And then XRP is boring, but this will explode at some point.
Yeah.
This still feels contextually like the right chart, but I think that maybe the hack kind of put it down a little bit below the intraday closing highs, which I would have preferred it didn't. But even if you draw it through the lows, it looks fine. I also think that it's really clear if you kind of just look at it like this.
Yeah, exactly.
With more than $200 million in Bitcoin ETF inflows this week and renewed institutional interest in Ethereum products, the crypto market is still displaying strong underlying signals despite ongoing macroeconomic challenges. This shows that major players are still involved, albeit at a slower pace. The U.S. Senate's progress on stablecoin legislation also suggests that long-term regulatory clarity will improve. Markets have responded subtly to these developments, though, underscoring a fundamental theme. Structural advancements in crypto still have less of an impact on short-term price action than do larger macro forces. The current market behavior in both traditional and crypto assets is a period of digestion following recent sharp gains, according to Raoul Pal and Julien. This opinion is supported by stagnant yields, a declining value of the US dollar, and overbought conditions in risky assets, which imply that consolidation may go on until a new catalyst, like changes in Fed policy or world events, changes investor sentiment. Emerging rotation and strength in cryptocurrency assets such as Ethereum and Solana are early indicators of possible new leaders for the next leg higher. The market is currently in a precarious equilibrium as long as geopolitical tensions and inflation worries persist, but the technical environment still supports a long-term bullish outlook. It's possible that the market is taking a breather before making a move. Tell us in the comments if you think this is the beginning of a longer sideways grind or a brief lull before another surge. Please remember to like and subscribe if this breakdown was useful, and check back soon for more in-depth market analysis.